Looking to our top business stories, home rents and sales prices in Dubai are likely to see growth towards the end of 2017. However, they remain stagnant in the first quarter of this year, according to real estate investment and advisory firm JLL. While rents have recorded a decline over the past year, there was barely any change in either rents or prices in the apartment or villa segments during Q1. This suggests that the residential sector is close to the bottom of its cycle. Craig Plum, head of research for the MENA region at JLL, was quoted in local reports saying that given the continued slowdown in the Dubai economy and its dependence on the global economy, where growth remains uncertain, any recovery in residential prices in Dubai is unlikely before late 2017 at the earliest. Meanwhile, a representative at Corsavilles stated regarding the rental market that the total pool of tenants has decreased over the last 2 years due to macroeconomic employment deterrents, while new occupier demand has not fully covered the gap. The market continues to bring new supply at an unchanged pace from the past few years, adding downward pressure on rentals. Around 2,600 homes were completed during Q1, of which Accoya accounted for 1,500 units. Apartments comprised more than 60% of completions, followed by villas at 24% and townhouses at 15%. A further 28,000 units are currently under construction and scheduled for delivery by the end of 2017. Meanwhile, the new Emirates NBD Real Estate Investment Trust was listed on Nasdaq Dubai in Q1. According to Plum, this is a sign of a maturing economy. There will be more REITs coming up during the rest of the year. Investors now don't need to buy the whole building. They can instead invest in units in a property trust. The Takaful industry has grown in high double digits across the Gulf Corporation Council in recent years, according to the Global Takaful Report 2017, released at the World Takaful Conference on Tuesday. In terms of gross written contribution, equivalent of gross written premium in the conventional industry, the GCC markets grew by a compounded annual growth rate of 18% during 2012 to 2015 period, while Southeast Asia reported a negative growth of 4% due to currency depreciation, and Africa reported a CAGR of 19% during the same period. GCC markets continue to dominate general Takaful, whereas Southeast Asia continues to dominate life Takaful. GCC had an overall market share of 88% of general Takaful market in 2015. Saudi Arabia and the UAE reported the strongest growth in general Takaful in 2015, with 20% and 19% growth in total contributions respectively. GCC continues to dominate the global Takaful market with a 77% market share, followed by Southeast Asia at 15%. Dubai Islamic Bank, the largest Islamic bank in the UAE by total assets, has reported a group net profit of 1.04 billion dirhams for the first quarter ended March, up 4% compared to the same period in 2016. Bank's total income increased to 2.37 billion dirhams, up 13% compared with 2.1 billion dirhams for the same period last year. DIB's net operating revenue for the first quarter increased to 1.8 billion dirhams, up 7%. Net financing assets rose to 121.4 billion dirhams, up by 6%. Sukuk investments increased to 24.2 billion dirhams, up 4% year-on-year, and total assets stood at 186.9 billion dirhams, an increase of 7% compared to 174.9 billion dirhams at the end of 2016. Meanwhile, the bank reported strong liquidity position with customer deposits at 137.2 billion dirhams at the close of the first quarter of this year, compared to 122.3 billion dirhams at the end of 2016, up by 12%. According to Dr. Adnan Chilwan, Group Chief Executive Officer at Dubai Islamic Bank, liquidity continues to be a key factor in driving growth, and the last quarter has once again witnessed DIB's ability to generate and mobilize deposits as needed.